Just keep in mind, like my long-term forecast for Bitcoin is it goes up 29% a year on average for the next 21 years. And so I look out to the year 2045, and I think it's like, base case is 13 million a coin. And it could go faster, it could go slower. But when you think about that, you're like, well, every Bitcoin you sell is going to cost you $13 million. Or if you decide to go buy a Ferrari or a sports car with 3 or 4 Bitcoin or 5, it's a $65 million Ferrari.
Yeah.
So think really hard. Do you want the Ferrari, which will be good, may get you a few dates and people think you're cool for the next few years. But would you rather have $65 million 20 years out? Because you can retire on that and live a very comfortable life.
Bitcoin's future is a story of transformative growth and limitless potential. As traditional currencies lose their value due to inflation, Bitcoin emerges as a powerful alternative, a scarce digital asset that is reshaping the financial landscape. With adoption soaring worldwide, it's not just an investment, it's the foundation of a new digital economy. Michael Saylor, in an interview, paints a compelling picture of what lies ahead. He predicts Bitcoin will grow by an average of 29% annually over the next 21 years, skyrocketing to $13 million per coin by 2045. Saylor challenges us to think long-term. Would you trade 5 Bitcoin today for a sports car, or keep them for a future worth $65 million? His analogy hits home. Bitcoin is more than a speculative asset. It's a key to generational wealth and financial freedom. Saylor's message is clear. The decisions you make today about Bitcoin could define your tomorrow. The real power of Bitcoin lies in patience and vision. It's not about quick profits, but about understanding its potential to secure a better future. For those willing to see the big picture, Bitcoin isn't just an asset. It's a lifeline to enduring prosperity in the ever-evolving digital age. Let's watch clips from Michael Saylor's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
We say that Bitcoin is on a need-to-know basis. I think that people that discover Bitcoin, they discover it because they need to know about it. And so that need to know comes at different times for different individuals and different corporations and different jurisdictions. If you're living in hyperinflation in Argentina, then you have a need to know. So the Argentinians were some of the early Bitcoin adopters and big Bitcoin advocates. So normally it's people in struggling economies, they get it. And then a company that's well run, that's very successful, doesn't have a need to know, very affluent on the Upper East Side of New York, don't necessarily have a need to know. They come a bit later. But when my company ran into travails and struggles during the COVID lockdowns of 2020, we had a need to know, and we started looking for a solution. So I would say that people adopt and embrace Bitcoin when they run into some challenge in their personal or professional life that causes them to open their mind and think, I need a new idea. I need to embrace a new way in order to move forward with life. The brilliant idea of Bitcoin is digital property. It's Cyber Manhattan. I've created a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep. You're buying 1/21 millionth of all the money that there's ever going to be in cyberspace. And one day, the 8 billion people are going to want to put some of their money there. And it's the most simple idea imaginable. Do you want to buy 1/21 millionth of all the money in the world for all of eternity? Like the product's going to be the same in 100 years, 500 years, 1,000 years. So think of it like, buying Manhattan in 1750 and you're 100 years late. And someone goes, you're 100 years late. The guy that's selling you the building paid less than you're going to pay. Aren't you afraid you're overpaying? And it's like, well, I'm going to dump it to a guy in 1770 for more. And that's stupid because you should buy it every year from 1650 to today. And it's the greatest city in America. So why wouldn't you want to own 67 blocks of Manhattan? Just like why wouldn't you own 67 blocks of Bitcoin. So you're never going to be too late if you understand that the future digital economy is going to be built on top of 21 million blocks of Bitcoin. I think the important thing is to understand it not as a digital currency, but as digital capital. Money decomposes into currency, which is the medium of exchange, like the peso, the ruble, or the dollar, or capital, which is a store of value, like a Monet painting, like a really nice penthouse in Manhattan, like a bar of gold, or like a Bitcoin. And so if you think of it as currency, you get really confused because you want to buy coffee with it. But the truth is, no currencies are good stores of value. You wouldn't want to hold $1 million of dollars or pesos or marks or francs or yen or anything for 100 years.
Right.
But, if you go and you ask the question, what did it cost for an acre of land in Manhattan in 1900? What did it cost for an acre of land in Palm Beach in 1900? I live in Miami Beach. The land that my house is on was $10,000 an acre in 1930. Now it's $20 million an acre.
Yeah.
Okay, so if you ask the question, what did your Monet cost in 1930 and what does it cost today? The point really is the people that bought Palm Beach or Hampton's real estate or Monet's or they want to buy Bitcoin, those are not speculators. It's not a 4-year. If you bought a Monet in 1913, and if you had to sell it in 1916 in the middle of World War I mean, maybe you sold it at a loss, but you're an idiot, right? Because 100 years later, it's going to be worth somewhere in the range of 100 to 1,000 times more money. So you should think of it as scarce, desirable property, something that a government can't make more of. I mean, the reason that Palm Beach real estate is valuable is because the government can't make more beachfront in Palm Beach. And they can't. The reason that dead artists are more valuable than live artists is you don't want the artist to make any more paintings. You want the Vermeer to stop painting. You want Da Vinci to stop painting. So you need a cap. It needs to be something which is scarce. It needs to be desirable. And Bitcoin happens to be the most desirable global capital asset. People are buying it because the alternative is to buy a building in Africa, or to buy a bunch of land in Siberia, or to haul a bunch of gold bars, in their car across a border, or to worry about someone spilling coffee on their Van Gogh. It's like once you see it like that, you're like, okay, I kind of like the idea that I can hold $1 million worth of value on my phone and I don't have to worry about someone spilling coffee on it. And if I needed to send it from here to Tokyo on Saturday afternoon in half an hour, I could do it. That's the way to think of Bitcoin.
Michael Saylor calls Bitcoin the ultimate digital property, likening it to owning prime Manhattan real estate in its earliest days. With a fixed supply of 21 million, Bitcoin is scarce, secure, and portable, perfect for the digital age. Saylor explains that people discover Bitcoin when they need a solution, whether facing hyperinflation or financial crises. It's not just currency, it's capital, preserving wealth effortlessly. Bitcoin offers timeless value, enabling anyone to store and transfer millions globally with unmatched ease and security. Michael Saylor breaks down 3 innovative ways to own Bitcoin, depending on your needs. For ease, ETFs like BlackRock's IBIT let you invest without the hassle, perfect for retirees or casual investors. If you want more control, buying Bitcoin on trusted exchanges and storing it with custodians like Fidelity keeps it safe and accessible. For ultimate freedom, self-custody is a game changer, especially in unstable regions. No matter your situation, Bitcoin is the go-to asset for secure, portable, and future-proof wealth. Let's watch more clips from the interview.
I think there are 3 reasonable ways to acquire Bitcoin, and the right way depends upon who you are, what stage of life you're in, where you live. Also, whether you're acquiring it for yourself, your family, or your company, or your government, or institution. And so if you're an institutional investor and you're acquiring it for your charity or your city or your government or your company, and you just want the economic exposure, you might just buy the spot ETF. And there are spot ETFs like IBIT from BlackRock or FBTC. And every country in the world, right? There are ETFs in Europe, and there are ETFs in Brazil, and there are ETFs in Germany and Australia and the like. And for some people, what they should hold is they should hold Bitcoin wrapped as a security. Now if you're a senior citizen and you just kind of want it in your retirement account or something, and you want to be invested 2% in it or 3% in it, in that particular case, that might also make sense, because you just pick up the phone, call your broker and say, just buy me a bunch of this thing. And you put the phone down after 10 seconds and it's done. And your bank, JP Morgan or Wells Fargo or whatever, Morgan Stanley, they've just done it for you, and it took 10 seconds. And my 86-year-old father is not going to actually self-custody, change jurisdictions, move to another country, and run in a hardware wallet. So for a group of people, that's the right call. For another group of people, they should buy the Bitcoin on an exchange that they trust, probably a regulated exchange. Depends on whether you're in London, or whether you're in France, or whether you're in Australia or Brazil or the US. Normally pick a regulated, trustworthy entity in whatever country that you have domicile. And then you buy Bitcoin and you buy the commodity. And then I would say for many people, it's okay just to put it into cold storage or put it with a custodian they trust. Many people custody with Fidelity, some custody with Coinbase. There are large banks in Brazil like Banco Itaú. So there are other regulated custodians that people trust. If you've already got an account with them and you trust them, then that would be simple. Standard Chartered Bank is another example of a regulated custodian. And then there's a third group of people that would want to take self-custody. And if you're capable of handling your own, if you're an adult, I would say you should be probably more than 18. Maybe you should be less than 75. Not because I don't think senior citizens can do it. I just think that their eyesight's not that good, right? Like at some point, if your eyes aren't that good, you have a hard time reading the hardware wallet and you struggle with that, then maybe you would think about it. But if you're pretty facile with a computer and you're facile with a phone and you're capable of managing your own assets, and if you have a need to, then you should take self-custody. And so another way to say is the more uncertain your future and the longer your future is, the more important it is for you to own Bitcoin and not own the security version of it. If you were sitting in Lebanon or you were in the middle of Africa and, my checklist would be, well, do you trust the bank? No. Do you trust the government? No. Do you trust the currency? No. Do you think you might need to change countries or cross the border with all your money? Yes. In that case, it's a no-brainer. You should have the Bitcoin in self-custody, or you should have it in a custodian that you trust outside of that country. But, at the point where you're like 85 years old and you're not leaving your living room, for the rest of your life, at that point, then probably you take a different view because you're different. And companies, like my company, MicroStrategy, we hold Bitcoin because we want to be able to move the Bitcoin between any custodian in the world or take self-custody. And when you do that as a commodity, there's no taxable event. So you're keeping optionality. If I needed to put it in London or I needed to move it between 100 different custodians, or if I wanted to take self-custody, I can do that without a taxable event. I wouldn't hold the security, because right now securities law in the US and the treatment of Bitcoin ETFs is you would have to sell the ETF, take a taxable capital gain, and then move the cash and then repurchase somewhere else. And that's a inefficiency of the current market structure. It might be cured if we get to in-kind create and redemption of Bitcoin ETFs, but right now it's an inefficiency. So I think if you think you need to move the asset around, you're advantaged and you have better property rights holding the commodity, the pure property, rather than holding the security.
Bitcoin's surge to a record $109,000 on Trump's inauguration day reflects its growing relevance as a financial safe haven. Michael Saylor's philosophy on Bitcoin as a digital property resonates deeply with this moment. Saylor emphasizes Bitcoin's unique ability to store and transfer wealth securely, likening it to owning a slice of Manhattan, scarce, valuable, and future-proof. Amid Trump's pro-crypto rhetoric and speculation about executive orders, Bitcoin's price spike underscores the market's anticipation of broader adoption and institutional acceptance. Saylor's insights into Bitcoin's versatility align with the evolving dynamics of the crypto market. He went further to outline 3 approaches to Bitcoin ownership: ETFs for convenience, exchanges for flexibility, and self-custody for ultimate autonomy. For retail investors, Bitcoin offers a hedge against inflation and unstable economies. For institutions and governments, it represents a powerful tool for financial sovereignty. Trump's rumored crypto reserve plan further validates Saylor's argument that Bitcoin is not just currency, it's a foundational asset for the future digital economy. As meme coins dominated headlines during Trump's inauguration, Saylor's caution about speculative assets gains relevance. While the Trump coins signify a cultural shift, they highlight the need to differentiate between Bitcoin's long-term potential and the volatility of trendy tokens. Bitcoin's unprecedented price movements reflect its increasing integration into mainstream finance. As Saylor advocates, owning Bitcoin now is about recognizing its value as a global, secure, and portable store of wealth, a necessity in an uncertain economic landscape. As we wrap up, how do you hold your Bitcoin, or are you yet to buy any? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.